Hey there, everybody. Thomas Wood here with Basecamp Trading. Happy New Year. It is January 2nd, and we're going to take a look here at the S&P. I want to talk about a couple different topics. First off, starting the year off right. One thing I see happen a lot of times with retail traders is they, especially when we get to the new year, they have resolutions, they have goals, they have a plan they put together, and they want to put it into practice. So they are in a hurry to get trading and make that money because this year they're going to do it right. And that's great. However, what this often does is it leads to traders forcing trades. So coming into a day like today and trying to trade every single thing and getting stopped out multiple times, and they end up digging a hole first thing in the year. And in my opinion, it's always better to start the year off on a good note. So one of the things we typically will do is we wait. Be patient, wait for a really, really good setup to start the year off with. And then we look to place trades after that. We do not want to force anything, and we want to make sure we stay in control of our emotions and keep them from making us jump into trades we shouldn't be in. Now that brings me to today's price action, because one of the things we talked about in the trading room today was I was sitting on my hands all day. I really didn't do anything. I had basically a break-even trade in Tesla, and that was about it. So one of the things we watch for, if the ES is gapping into significantly over or undervalued, which is the upper and lower red areas on these value bars indicator, if we're gapping into that red area like we did this morning, we don't want to trade it until it consolidates. That typically means it's due for consolidation or a pullback, because the market only trades significantly over and undervalued about 1.5% of the time, historically speaking. So when we see something like that, that means the likelihood of chop is much higher, and the likelihood of a market following through and running is much lower. And you can see here, this is kind of what we've done today on a 5-minute price chart. We have chopped. You had a couple of different flushes, but overall, market was very, very choppy. So not really a good opportunity, not really any good setups, and it was a good day for us to be sitting on our hands. So we'll keep an eye on everything, see what kind of opportunities we get as the week progresses. But don't be in a hurry just because it's a new year. Don't force trades just because you have a plan and you want to put it into practice and your emotions are running high because this is going to be your year. Take the time to take the correct setups, wait for the opportunity to come to you, and then make sure you jump on it when it does come up and stick to your plan throughout the year. But that's it for today. I hope it helps. Here's to a prosperous 2024 for all of us. And until next time, everybody, don't forget to like and subscribe, and happy trading.